Okay, good morning, good afternoon. Welcome to the Trade Informed Backtest webinar. If you can hear the sound, just let me know. Drop a message in the chat. I will be starting in just one moment. Question there from Meran. I get the possibility of Excel for data analysis. How is the data imported into the Excel file? Well, let's have a look at that today. Great question. Hi Steve from Torquay, good to see you here. Avi, great to see you here as well. Cryptocurrencies of interest due to the volatility. Yeah, good point. Very fast moving averages and stochastics. We'll come back to some of these. I recorded a video, you might have seen it about 3 or 4 weeks ago, where I looked at Bitcoin in particular. My idea that cryptocurrencies should really only be traded in terms of the direction of the trend. So I've looked at breakouts, I've looked at, in fact, we can have a look at that model in a little while. But really the whole point is that direction of the trend. People who have been entering on Bitcoin on a retracement have been crucified over the past couple of months. So just go enter in the direction of the trend is at least half the battle with cryptos, I think, at least in my analysis. Hello Tova, hi there, good to see you. I've had a look at the, you asked a question, you sent me an email about Mexican US dollar MXN. I've done a very, very little bit of analysis on that, and we can have a look at that soon as well. And hi Leo from Maine, US. How are you doing? Great to have you here as well. So this is going to be interactive. Fire all the questions in. We're just going to do the analysis. I'm going to do the analysis right in front of you as best I can. So if you spot anything, just fire it in. As soon as I see anything in the chat, I will endeavor to respond. I've got a few ideas. I've got a few models that I would like to start off with. Tova, you've suggested USD MXN. I've got some very, very basic first look at that, but we can have a look at that to start. Avery, great to have you here as well. Hi from San Francisco. Must be quite early in the morning, so good. Good to see you here. Middle of the afternoon here. 3 p.m. in the UK, very humid. Got some coffee, and I'm going to be starting on the analysis really, really soon. So I'm going to try and get through things really quickly today. I don't want to hang around. I want to test as much as we can. And if you like the format, we'll try and do something very similar very soon. If you don't like the format, tell me what you'd like instead. And I'm going to try and cover as much ground as possible in a shorter time as possible, because I know people have got stuff to do. So I've got TQQQ on the screen at the moment. Where should we start? Let's have a look at data, because that was the first question that was raised to me. So I'm just going to cover this very quickly, because this is a technical questions related to the models themselves. So this is what the model data page looks like at the moment. We've got what I refer to as offline data. This can be any data source you like. It's got to be in the format of text or CSV file, and you can just import it. And it doesn't matter if it's daily, weekly, monthly, 5 minute, 10 minute. Any data that you have on your hard drive, you can import it using this system here. And I'll demonstrate that in a moment. There's a couple of other options as well, because there are so many good sources of data out there. Excel stock history. If you are an Excel 365 or a Microsoft 365 subscriber, you will be probably familiar with this stock history thing. It's data provided by Refinitiv to Microsoft, and you can just click this button and import on the daily time frame. It doesn't do intraday, but the data is pretty good, and there's quite a lot of it. And the old favorite, Yahoo Finance, tons and tons of data on there, and all you need is the Excel, the Yahoo Finance code. They've got a few odd ones, But if you're looking at stocks and ETFs, it's pretty easy. Just put in the ticker and select the data source you want, like I'm doing here, and click this button. So 3 sources of data, either your own in yellow, either Microsoft's data in green, or Yahoo data in blue. So we'll demonstrate that in just a moment. Right, so Tova, you raised a question about MXN. So I did actually have a very quick look. I don't think I've got any big conclusions, but I'm happy to take any thoughts about this one. I'm just loading it here. I've got a few files open. I'm going to close them in a minute. This is what I did very, very broadly. So Tova, you contacted me this morning and you sent an email saying, what about inflows into the Mexican peso, remittances into the Mexican peso? Does that effect have a consistent effect? Well, I've looked at data dating back to 2008, which is what the data, this is the data that I had available. I've looked at it in terms of one of my favorite seasonal metrics, which is trading day of the month. And I've just looked at it on trading day of the month, typical gain, average gain over that time period. So what is that? 14 years. And this is what I got. If you can see that, I appreciate not everybody might be seeing this on the same size screen. So if you bear with me, I'll take off the watermark. If you're having any problems viewing it, just let me know. So this is what I got. So this is USD MXN, Mexican peso, measured in US dollars, or rather how many pesos you buy in US dollars. You can see here what we've got at the end of the month is US dollar appreciating, and roughly, it seemed pretty roughly to me, start of the month you have the, apart from this day one, you have the Mexican peso on average slightly stronger. Whether that's a tradable phenomenon, I'm not sure, but there were some quite big outsized ones here. If you can see this table, I'll zoom in Excel. Here we go, and you can see here, in fact, I've got another version. Let's look at this. So this is in terms of trading day of the month. So the very first trading day of the month, it ignores weekends, it ignores holidays. So you can see here, we always have a first trading day of the month, obviously, and we almost always have up until about 20 days of every month. We have slightly fewer months with 21 days and even fewer with 22 and 23. So that's worth bearing in mind. So you can see here 21, 22 and 23 outsized, but there could be some statistical thing going on there because there is not as many of them. But it might be worth being aware of at least if there's a longer month for some reason. However, that whole month was positive. So yes, I would say let's have a look at what the absolute price has done. It's gone from 10 pesos to 20. So yeah, over the time period, the US dollar has, the Mexican peso has got weaker against the US dollar. So we're going to see more of these up bars. However, the whole second half of the month stronger, whereas start of the month, and this may be the bar that is something to do with your idea, your thesis, Tova, that remittances can have a tradable effect on the USD MXN. As I said, just drop any thoughts in the chat, otherwise I'll move on. All of these days where peso was stronger seem to occur in the first half of the month, broadly speaking. So maybe that is something to be aware of. If you're a Forex trader, if you're trading intraday, that could be an interesting pattern as well. Whether that in itself can be traded systematically, I'm not sure given trading costs, but it seems to give some credence to what you were saying, Torva. So I don't know. Let me know what you think. So Leo, yeah, typical strategies, trend and breakouts. Yeah, okay. Um, so Maren, where does this data come from? This is just a data supply. You can get this data from anywhere. You can use either Excel. This is just daily price data from 2008. I'm using it from a data supply that I have, but any data, publicly available data from Yahoo Finance will work fine. So yeah, I said I'm going to close down some of these many spreadsheets I've got open, and I will show you how I import data myself. Let's just close down these spreadsheets. And this one. So all I've done is I've just got a stripped down version here of the downloader that I use in my sheets. And I'll explain it in just a moment. And I'll keep that open. So yeah, so all I've done, you can see I've got a drop down menu here. So all I have done is use US dollar MXN. So I've gone down to my drop down list and I've clicked on this button here, and this will update it. So I have that file on my hard drive, to clarify. So I have this file and it just imports the data that you can see here. So that's how it works in the spreadsheets. Anybody who's a member, I have data available. So if you want to join my membership program, I have these data files as well. But you can use these free services as well. You can use Excel stock history and Yahoo Finance, and the data will be pretty good as well. You might need to have a look at it, just make sure you're happy with it, but the data is usually pretty good from those sources. So it'd just be a question of pressing one of these buttons. So that was okay. So Tova, yeah, first week only. Thanks for checking it out. It's possible if it's a regular occurrence. So yeah, I've done the most basic analysis. I realized that I only did that very quickly. The most basic analysis that I could on this, just to have a look at the theory. So it will be interesting to see how well this in fact, maybe we could have a look at it. We can have a look. Let's do that. Why don't we do that? So I'm just going to open up a new model, and we can have maybe a very simple look at that. So we've established that there could be a tradable pattern. So we've found a possible statistical thing, and I'm going to put in this model. I'm going to put in 6T. No. So it's just what it's doing here. It's importing the data and it is doing all the calculations. Oh, so there's, oh, well, that's interesting. So this strategy, this model that I have just used, I've never tested this before just now. And close this. So this model is the one that I demonstrated in my video. You may have seen it a couple of weeks ago on a bottom fishing type strategy. So what I mean by that is we'd had some very oversold conditions. We've had a bit of a bounce back in the stock market, if you're following that. We've had a bit of a bounce back. I'm sure most of you know that. So it isn't probably the ideal conditions, but this model is designed to exploit the very deeply oversold conditions. So the strategy uses a long-term stochastic oscillator, and it's got to be weak, and it's got to have some short-term volatility to the downside. Effectively. So I'm using a Bollinger Band on the stochastic oscillator as the entry signal here. So one thing that's long only, I'm not sure I actually put some, no, I didn't put any short conditions. So I actually meant this only to be a strategy for stocks. And when I do a stock strategy, often it will be just a long only strategy, because stocks have a tendency over time, we all know they tend to rise. So I think, particularly on the daily time frame, you need to have different entry and exit conditions for short selling stocks, equity indices, and the like, equity ETFs as well. So this is US dollar MXN. So the swap is better when buying this pair. Okay, so what I've done is I've imported the data that we're talking about now. So what I'm going to do is I'm going to repeat the analysis that I just did, and I'm going to look at trading day of the month. I'm going to put it in here. And the way I calculate it, it's pretty easy. So I'm going to assume we start on this. It's going to be the first day. It may actually not be in this case, but I don't think it will matter. So using an if statement, if today's date was a month, it's different to the previous one. In other words, we have a change of month. We can do that for any date that's recognized as a date by Excel. So we have the trading day of the month, and you can see, like we saw in the other analysis, mostly we're getting up to, see here, getting up to 19 trading days in that month, 22 in that month, 21. So what we saw, and I'll bring it back, is stronger first half of the month, and stronger peso. We're dealing with a pair here, stronger US dollar. So above the line, US dollar, below peso. So I've got my entry conditions in here, and I'm just going to delete them. So that strategy that we saw, I'm just going to get rid of it. And there's no specific entry conditions, so I don't need to adjust the exit conditions. Right, okay, so let's just say very simply, if the trading day of the month is specific day of the month, and we're going to put that specific day in here, just bear with me, then we're going to have an entry. And I'm going to do something else. I'm going to say that it has to close after just one bar. So entry day. And so we're entering on the close of day 1. So there's another way to look at this actually. We could actually count back the trading days from the end of the month, and there is a reason to do that sometimes, but let's not confuse it for now. But I'm counting upwards from the very first trading day of the month. When you get closer to the end of the month, it is actually, I think, more useful to count backwards. But anyway, that's a topic for another day. So we can see entering on day 1, entering at the close of day 2, day 3, day 4. So we're only buying here. So what we would expect is that days towards the end of the month, if it's going to match our other analysis, should be better for buying. Indeed, that seems to be the case. Pleased about that. And days towards the end of the month should be better at selling. So let's reverse that. And I'm going to put in a short condition here. So stop me if anybody is finding this stupid or confusing or anything. I would love to hear what questions you have or thoughts about it. Let's try that again. So I'm going to do exactly the same thing, except I'm going to do it for short trades now. So I'm going to look at this trading day of the month column, and I'm going to make it equal to this cell. Now this is for short trades. So I'm going to call this long entry day and short entry day. Now we're just holding for 1 day, so this is very, very basic. Let's say 1. And so this doesn't seem to match, does it? Well, that's interesting in itself. Let's see if I've got something wrong here. This is the thing about doing it live. Let's see if we're how these trades are. So one thing you can always do is have a yes. So it's not closing them correctly. So let's just take that out. See if it is. No. So it's not what's happened here is it's not closing them at the correct time. We want to close it. So it looks like we've got one of our conditions is missing. So that should be equal to or greater than that. Here we go. Let's do it the way around. So I need to check all these other conditions are true. The reason I checked that is because the results weren't showing what I wanted. It just shows the importance of making sure making sure that if the results would look really great, it would be very easy to accept them. If they're not great, we don't want to accept them. So always check results. So let's check all of these things, and so that should be true. So E27 should be true. No, that's not right then. So getting closer, I think. So E37, D37. There we go. So start again. So day 1, entering. Let's go back to our thing. This should be this one here. So it's interesting that we are seeing positive expectancy. Let's look at some of these other ones. 2, day 3. Again, we should expect these ones in the early part of the month to perform better. Not all of them. So there we go. There's another start there, Torva, looking at the this analysis that we've just done here. All I've done is I put it into an actual model, and so we can actually look at the day itself. So we can look at both short and long entries if we wanted to. So there we go, and we could look at a combination of both of them. Got to account for expenses. USD MXN is not one of the major currency pairs, so you're going to be paying a higher cost of trading, but still I think pretty interesting for having a first look. So let's move on from there. Is your own testing software? Yes, it's my this is obviously Microsoft Excel, but it's my trading form backtest model that I'm using here and for the analysis. So yes. So anybody else has got any comments or thoughts about that? I'm going to move back onto the leveraged ETF strategy. I'm just going to open that up. Now let's do something different. So at the moment I'm working on a new ebook, particularly about trade entries and covering some of the ones that I've done before, bringing them up to date, but also a load of new strategies that I've just been looking at and working on. So this is one of the ones. This is a model that is still in the process of being analyzed, and this is using something that I've done quite a few times before, and that's Renko. A lot of people have contacted me about Renko, and sorry, this is the zigzag indicator. Let's do Renko because I've got that here as well. So yeah, this is TQQQ. So I was having a look at that. These are parabolic rises up in the leveraged ETFs, always worth being a bit wary of. I'm certainly not saying this is a complete finished strategy, but I thought it was pretty good. So we've got a good, nice high MAR ratio, and all the strategy is doing, it's the Renko strategy. I initially published it about 2 or 3 years ago, is trading in the direction of the Renko, but using a retracement bar as an entry. And in fact, we can actually see here, so we're only taking, actually we're taking long and short trades here. So just a single bar retracement. So I can put it on the chart here, demonstrate a bit more clearly what I'm talking about. So I'm using the Renko. Let's put in the leverage version here. So TQQQ. We don't need these either. So we're using Renko to set the direction. Renko, if you're familiar with it or not familiar with it, it normally looks something a bit like this. So nice, smooth. So I've set it to 10%. There we go. So we've got the last few years, in fact the last decade, in looking at TQQQ in terms of Renko. So Renko is a bit of a, it looks smoother than it actually is. So this is exactly the same data that we had in the candlestick bars, except it is presented as these Renko bars. Renko bars are price-based rather than time-based. So the price has to reach a certain point before a new bar is created. And you can use different ways to construct these bars or bricks. And what I'm using here is percentage. So each one of these is 20% of the price, and it looks a bit unusual because, well, because of these parabolic moves. This is the move up from the sell-off that we saw for the COVID crash, and we saw the price go whatever it got into single figures all the way up to when we had that cooling off. It was really this year, end of the last year, start of this year, and then we have had the subsequent whatever we're going to call it, 2022 bear market, particularly in tech stocks. So this was that sell-off, and this bar here is telling us on the 20%, Renko 20%, that we're in a possible start of a new uptrend. Now Renko is biased towards the trend. It's one of its features, which means it has to make a larger move to change the trend direction. That's why when I scroll out and we can see the whole line, it looks so good in trending like that. So I'm going to go back to the candlesticks, because of course we still have candlesticks underneath, and so we still have all these candlesticks underneath. We still have the real world, and we are entering on a retracement in this strategy. So Renko is the direction, it's that smooth trend, and then the entry signal is a retracement. So for a long trade, we need to have a red short candle. So that's what it's doing here. Now I have selected some good settings for it here. We've got a trailing stop, we've got a hard stop, and we've got a profit target. So we're getting quite a lot of trades here. So hundreds of trades, in fact, over the time period, which is, let me have a look, myself, since 2010. So hundreds of trades. So it's quite an active strategy. This is where we set the bar size. This is where we set the retracement, both long and short. So anybody, any comments, thoughts about this type of strategy? This is one I have done before. I'm only recently revisiting it, and I thought it was interesting. I know that a lot of people like the leveraged ETFs. They are interesting. They've got an interesting properties. Obviously there is, I mentioned in my recent video, there's a lot of risk associated with them, particularly like I mentioned to Stephen earlier, that for the same thing with the cryptos. If you're buying them on a retracement, you've got to be very, very careful. But this strategy, or rather the one that I was mentioning, the bottom fishing, is a retracement strategy, but it's hopefully a very deep retracement and we don't get many trades. This one that I've got on the screen at the moment is the opposite. It isn't quite the opposite, but it is a trend following strategy. It's a trend following. So we're always looking to go in the direction of the dominant trend identified by Renko. So going back to Leo, your point earlier, typical strategies, trends and breakouts. This is definitely a trend, direction of the trend strategy. And the other thing, which I mentioned, Stephen said earlier, is breakouts. And Leo, you mentioned it as well, breakouts. Let's have a quick look at the strategy that I put in a video about a month ago, and that's Bitcoin using either breakouts or trend momentum strategies. So I'm going to get that up, bring that up now. So breakouts, yeah. No, that's the backup version of it. Okay, so where have I moved it to? Okay, so I'm just going to close the other files. You can see here Bitcoin in terms of US dollar. That one, just closing down now, was the TQQQ in my Renko strategy. That one, XLK, tech stocks. So, breakouts. This one here, I did this in the video a couple of months ago and got some nice feedback about it. You can look at it in breakout. I've just actually called it a breakout. That is a standard channel breakout that I've talked about. I can put it on the chart here. Can we find Bitcoin? Yeah. And this is a standard channel breakout, Donchian channel, price channel. I've found the shorter channels work pretty well with Bitcoin. Once we get a channel breakout, Bitcoin, it does retrace sometimes. It retraces, you know, we can see it here. But once we have follow through, we have significant follow through. So this is all the breakouts to the upside that we were getting through 2020. Another one, yeah, another one. Deeper and deeper retracements each time. Then you'd have had to be a bit of a genius to identify this at the time. But we had a breakdown here, had a bit of follow through to the downside, but again, breaking out, and then we've had the fall. What did we get up to? Nearly 70,000 down to current price, stuck in a range down here at the moment, 22 odd thousand. So this has been the suggestion that I've made over a number of years. I think it was 2018. I can't remember exactly, but something like that is when I first looked at Bitcoin and I looked at breakouts, and it still seems the obvious choice. Now, this is the model that I did recently, and this is the breakout. This is the price channel. You can adjust it here. So put it very, very short or slightly longer. Didn't work quite as well. Slightly longer channels, something around 35 worked pretty well. Still a lot of volatility, and I used the average true range to adjust for that volatility. So that means that it's not taking huge position sizes when we've got a very, very volatile market environment. Now, I also used two other things. I used the RSI, and again, I'm using the RSI here as a momentum style entry. So the price has to be strengthening to enter in the direction of the price. Our rate of change, also called momentum, pretty much the same thing. So the price has to be strengthening to enter a trade. You can play around with the settings and things like that, but it's entering in the direction of the trend, Stephen. So that was my thoughts about it. Again, happy to take any thoughts people have about that, whether you like other cryptos. I tend to test Bitcoin because we've got the most data. It is the most liquid. I tend to assume Bitcoin is a proxy for the others, but I'm quite sure that some of the others have been behaving very differently recently. So if you've got any other thoughts about that, it probably is worth testing some of the others, but there's not as much historical data. So that's when I've done Bitcoin recently. Again, if you've got any ideas, we're not going to have time for it to do too much more analysis today, but if you've got any ideas, you like the format, message me, contact me at tradingforum.com, and I hope to do more of these. I want to get your ideas. I want to get the ideas together. I'm only looking to share it. You can see I'm doing all the analysis in front of you here. You can see any of the other results. You can see the entry conditions that I'm using. And if they're not clear, then I'm happy to publish those as well. What I'm trying to do is just to open this up and try and get as many good ideas and test as many things, test as many theories. If people have told you some amazing trading strategy, let's test it together and see what we think of it. See if it is good. Sometimes it is. I've tested lots of other people's strategies. Sometimes they are. Sometimes not so good, but at least we've got data. So that's the key thing, getting the data out there. Okay, yeah, thanks, Stephen. Yeah, these were my ideas. I'm using Bitcoin, as I said, because it's the most liquid and we've got a lot of data. This analysis is actually up until June. So I don't think I've updated the Bitcoin data since then, but it'd be worth seeing how it has performed since then. But it is taking long and short trades. And as I mentioned in my video at the time, again, this is a factor for the because the price has gone up over the time of our historical backtest. Long trades have tended to outperform short trades. However, we don't know whether that's going to last. We never do. So again, it's a philosophical thing whether you want to include long and short trades. If you've got a bias to one side or the other, you only want to take long trades, or you hate cryptos and you think they're all going to go to nothing, go to zero, then you could just trade this type of strategy to the short side and combine your fundamental ideas about it with a strategy using all the data that we currently have on in this particular market. So is there anything else that, let me see what I have also had a look at earlier. That's the inflows thing that we looked at earlier, USD, MXN, and it did, the model, you could see the analysis that we did there, it did seem to back that up, that earlier in the month we get some peso strength, later in the month we get US dollar strength. So that's a tendency that could be combined with trend, could be combined with breakout, mean reversion. If we're expecting a mean reversion, could be compared. Next time we could have a look at the month of the year. Could have a look at the day of the week as well. That can have an impact. So there are lots of different things to consider. Week of the year as well could be another thing to consider when having a look at this type of strategy. Okay, so I think we've got no more comments at the moment. I'm going to end the webinar today. I'm very happy to do more of these, really want to be doing more of these, but I want to make it useful. So let me know what you liked, what you haven't liked, and send me your ideas most importantly. If like Tove, you've got an idea or something you've heard and you want to share it, let me know and I will put the analysis up here and we can do it right in front. We can take ideas about different ways to consider this, and we can see what the results are together. Okay, well, I'm glad, thanks very much. I'm glad you enjoyed that. And as I said, my name's Mark. Contact me at tradingform.com if you want any ideas, any analysis that you've seen today, and I will be happy to speak to you further. So I'm going to end the webinar for today, and I look forward to speaking